Welcome everyone, happy Thursday. I hope you're all doing great. Thank you so much for taking the time to join today's webinar, where we're going to be talking about multifamily investing strategies inside of your IRA. It is top of the hour and I do want to be respectful of everybody's time, so we'll go ahead and get started. I'm Reneika Lightbourne with Advanta IRA. Our speaker today is going to be Richa Goyal and Neil. So thank you so much for being our featured speaker today.
Thanks, Reneika, for having me over.
You're certainly welcome. So Rich is going to cover some of the strategic advantages to multifamily investing, some of the many benefits that she's able to provide to her investors, deal sourcing, and of course, just some general investing strategies as it relates specific to multifamily. Before I turn it over, I just want to give you a general synopsis of what self-directed IRA is and how it works. And of course, if you're ready to get started with us, the steps to do that. If you have questions, feel free to put those in the question box. We'll get those answered as we go throughout and also allocate some time at the end to answer any remaining questions. Again, I'm Reneika Lightbourne with Advanta IRA. I'm one of the business development specialists with Advanta. I've been with Advanta for going on 5 years now as an employee, but I'm also an Advanta IRA client prior to joining staff. So self-direction is something that I actively do. So this is something I strongly advocate both personally and professionally. If you have questions or you want to talk through your specific scenario, you're always welcome to give me a call or send me an email, or feel free to visit our website at advantaira.com. It's an excellent resource for all things related to self-direction. Just a little quick disclaimer before we get started. All of the information that's going to be presented today is just for educational purposes. At Advanta, we don't give our clients any tax, legal, or investment advice. We always encourage you to consult with your professional team, whether it's your attorney, your CPA, or financial advisors. Just a quick takeaway, if this is a new concept for you, just know that any IRA or former employer plan, like an old 401k, qualifies to be self-directed. 2, you choose the investment that works best for you. Today we're focusing on real estate, specifically multifamily. And then of course, the third takeaway is just knowing that all of the income that's generated from that investment flows back into the IRA. If there's any related expenses, it's paid by the IRA. Just a little history about Advanta and who we are. We've been in business for about 21 plus years now. We are one of the leading self-directed IRA administrators in the business. Our headquarters is located in the Tampa Bay area. Advanta also has an office in Atlanta, which is where I'm based. While we don't give our clients any tax, legal, or investment advice, our team is comprised of attorneys and certified IRA service professionals. Having the fact that we do work with clients nationwide, we have a little over 2.7 billion under our administration. So we're obviously actively continuing to grow. Our focus here at Advanta is providing you, our clients, a dedicated account manager, so you have a direct point of contact, someone who's going to be with you for the life of your account when it's time to make your investment. And then, of course, having the opportunity to provide you great educational content where we have experts and practitioners such as Richa to come and share knowledge share on investment opportunities. This webinar is recorded. It's going to be uploaded onto our YouTube channel, typically within 24 to 48 hours. I would also encourage you to visit our website, check out our events page for upcoming events that we're hosting, or networking events such as our Pitch, Promote, Prosper. Also, too, I would encourage you to check out our blog, and my colleague Alex Perney hosts a podcast, anything and everything related to self-direction, just more an informal type format. So exactly, just really quickly, understanding what is a self-directed IRA. A self-directed IRA just simply means that you, as the account owner, you're going to have complete control over your retirement funds. You have complete control to decide what is it that you want to invest in, and of course, having the ability to diversify to build your retirement wealth. Most of our clients at Advanta use IRA funds to invest in real estate, whether it's a single family or it's going to be a flip or a rental. Obviously, today we're focusing on multifamily, so you can be a passive investor investing in a multifamily syndication, such as what Nirvana Capital provides. You can invest in tax liens, notes and mortgages, precious metals. It's near limitless in terms of what's on the table for you when it comes to self-direction. So why do people choose to self-direct? You can look to self-direct for many different reasons. I'll just touch on 3 of them. One, it can be a new source of capital for you. So if you have an existing IRA, or if you have an old employer plan, whether it's a 401k or 403b or TSP type plan, instead of tapping into your rainy day fund or taking out a bank loan, you can elect to move those qualified retirement funds to invest and invest in your next project. Another reason as to why someone may choose to self-direct, because of the stock market, the ups and downs, the volatility. We know with real estate, specifically with multifamily, it provides housing. People are always going to need a place to live. So again, it allows you to diversify while still actively growing your retirement account. And then of course, the tax benefits, having those rents, those profits, those dividends flow back into your retirement account, tax-free or tax-deferred, depending on the type of account that you have. In terms of the different types of accounts that can be self-directed, it's the ones that you're already familiar with. For individuals, you have traditional IRAs, which is pre-tax funds, meaning you get the tax break up front, you grow your account over time. Once you reach retirement age of 59 and a half, those distributions are then taxed at that time. Whereas Roth IRA, you elect to pay taxes up front, you grow that account over time. As long as you've held that Roth account for at least 5 years and you're 59 and a half, those distributions would be tax-free. For business owners, entrepreneurs, if you have a side business, you can certainly also look to self-direct plans, specific SEP IRAs, simple IRAs, or solo 401ks or individual K. A lot of real estate investors, if you're eligible, like the solo 401k because you have higher contribution limits, you have greater flexibilities. If you want to know more about that, I can, again, have that one-on-one with you. Some lesser known accounts that are also, just as important that can be self-directed is a Coverdell educational savings account. So if you have kids or nieces and nephew, you can look to self-direct an ESA for them to cover educational expenses. For health savings accounts, as long as you have a high deductible plan, you're eligible for an HSA. You can elect to use that HSA, open up an HSA, and again, self-directed to grow that account, but also cover medical-related expenses. And then, of course, just know that any former employer plan, again, it can be an old 401k, TSP type plan, or some other pension plan that can be self-directed. The few ways that you can fund your account or add money to your account. So again, if you have an existing IRA, you can transfer as much or as little as you want to or need to. In that scenario, if it's an IRA, let's just say you have an IRA at Fidelity, you just need to make sure whatever dollar amount you decide to move, it's liquid, it's in a cash position. Advanta will submit a transfer form over to the other custodian to move those funds over on your behalf. If you have an old employer plan, again, like a 401k, you would have to initiate that process, reach out to them, let them know you want to move X amount of dollars over to another qualified retirement account. There's no tax liabilities for you to do that. With a direct rollover from an old employer plan, they'll report to the IRS that X amount of dollars left their account. But once Advanta receives that same dollar amount, we'll also report to the IRS to neutralize, to again, make sure that there's no tax liabilities for you. And then the other way that you can fund your account is by making an annual cash contribution. As long as you have earned income, you can make a contribution. So for traditional and Roth IRAs, if you're under the age of 50, for traditional Roth, you can contribute $7,000. If you're over the age of 50, you can put in $8,000, so you have the $1,000 difference. For SEP IRAs, you can possibly contribute up to $69,000. 25% of the earned income. With the solo 401k, very similar in terms of the amount that you can contribute. You get to contribute twice, once as employee, and also you get to match as the employer. For ESAs, you can contribute $2,000 per year per child. With an HSA, you can put in, for individual plans, you can put in $4,150. If it's a family HSA plan, you can put in $8,300. So the process for us to get started, when you're ready to, you've done your due diligence, this is something that you want to, incorporate into your investment strategy. To get started with us is pretty straightforward. Step 1, filling out our application. You can do it on our website, or you can reach out to myself or one of my colleagues, and we'll be able to walk you through the paperwork. Once your account is open, again, you have an assigned account manager that helps you when it's time to make your investment. You choose the investment. We just make sure it's done in accordance to the IRS rules and guidelines. And then step 2, obviously funding the account, again, transferring from an existing IRA or rolling over from an old employer plan, or making an annual cash contribution. And then finally, step 3, what is it that you have an interest in? As a passive investor, do you want to invest in a syndication or a multifamily project? You certainly have the option to do that. And with that, I'm going to go ahead and turn it over to Richa. Just bear with me one moment. Let me make you the presenter.
Okay, so we're located here in Atlanta, Georgia, and we're going to talk about investing in multifamily, a little bit about myself, my background, and how I got started. So my journey in real estate started in 2007, 2008, when the market crashed. I started purchasing a lot of single-family homes and townhomes in the foreclosure market, with the idea of actively buying the properties and then eventually managing and having a passive income through the rental of these properties. So I purchased a lot of them and started learning how to start managing these properties, getting the renovation, getting the leasing and everything done. So as I was going through them, and I realized how difficult and it's hard to manage properties along different Metro Atlanta and driving here, driving there, I wanted to get more into multifamily after having done it for 2 years. So I decided to venture into multifamily and started looking into it, but it was very hard to break the market. So I decided to enter my MBA with Emory, and while I was doing there, I got connected with some alumni, some professors, and I started making the connection in the Atlanta area. And through them, I was able to find a job with a developer in financing who was doing a mixed-use development in Florida. So I got my foot in the door in 2014 and started working on the financing side of the project. It's a $1 billion project. And while I was working for the project, the owner was looking to get some money for a hotel that they were purchasing. So me and my four of our friends together, we put a little fund together for about $2 million and invested in the hotel. Well, that opened a lot of questions of our friends of friends. They were asking, oh, how do we get into this? How do we find out what's the risk involved, and how do we trust someone? So that led to me doing another round of funding for the student housing. And what I realized is a lot of people wanted to invest in real estate, and they wanted to have a source of passive income, but just didn't know how it worked, how the process worked. So with that, I started hosting education sessions primarily with friends and family, and that led to from 5 of us, we grew to over 20 people, and then slowly I started getting more and more referrals. And that led me to quit where I was working, and Nirvana Capital Group was born in 2019. And the very first deal that I did was a small 17-unit property and raised about $650,000. That led to for me to get into more, into the network of brokers and lenders, and so basically that's how my journey started. Since then, it has been I'm very lucky to have all the investors and my network of people that I know in the industry. So I've had I've raised about $75 million of equity investment for my own portfolio. Currently, we manage a portfolio for over $200 million. We have had a few exits for almost 800 units. And our average return that we have provided to the investors is between 23 and 50%. And along the way, as we started acquiring more properties, we realized the value of efficiency, and we had started our own property management company, our own asset management, and our own renovation staff. So that helps us between the efficiency and keeping everything in-house, and have better control on the cost and timing of the project. So that's how my real estate journey started, and how I've been doing this for 15 years now here in Atlanta. And please feel free to stop me if you have any questions or concerns, but I'll just continue to keep going.
Thank you, Richa. I'll interject with the questions. I have, one of them, but I answered it, but I will definitely interject and ask questions as they come in.
Okay, thank you. So about Nirvana Capital Group, like I said earlier, it started in 2019, and we provide passive investment opportunity in the multifamily rental market. Our target return when we are looking at any deal is anywhere in the mid-20s IRA range, where our goal is to have a risk-adjusted return to the investors. And so we play in we look at a lot of different deals and a lot of different opportunities, and we are only targeting the properties or the areas where the risk is adjusted and our returns are in the mid-20s range. So when we buy these properties, we try to identify where is the value that we can add in these properties. Is it the value in doing renovation? Is the value in the lease up? Is the value in building extra units? So that's why our strategy so far has been able to give us the returns, the target returns that we've had, and also the relationship that we have built in the industry to identify the right opportunities in the right space, the right lenders, the brokers, the insurance companies. So all of those relationships has really helped us access to attractive opportunities in the market. And it has allowed us to develop trust with the lenders, and we are able to get very favorable terms when it comes to getting debt from the lenders.
Richa, I did have a question that came in. It says, which type of properties and neighborhoods do Nirvana specialize in?
Yes, so we specialize in more B and C class properties. And a neighborhood is basically wherever we see a growth opportunity, where the area is growing, whether it be, for example, in Atlanta, Atlanta downtown is expanding, and the areas around the downtown areas that serves the downtown in terms of the growth from a perspective of the distribution centers, the B and C class properties that are around the major highways, easy access, and where the areas are getting gentrified. So we target those areas where there is growth opportunities coming up and the people are moving in because of job, because of access to the highways, the school systems, and better areas to move into.
Thank you.
Mm-hmm. So a little bit more detailed background of Nirvana. So we have successfully, we were talking about successful track record. So far we have exited about 3 properties, and largest of that was 436 units. So we've had between what we own and what we have exited, it's over 1,750 units. The total capital that we have invested is over $300 million. And we have a unique individual investor base of 500 plus investors. We focus on mainly workforce housing. Like I said, the growth, but it's more B and C class, the workforce housing market. We were in Georgia primarily, and recently we've expanded into Texas, and we are actually in the process of closing a deal tomorrow in Austin, Texas. And all our investor base has been through referrals. We don't advertise anywhere. It's always been, we say the referral is the best reward that we can get. So we have grown from 5 people to over 700 users that we have on our portal. And of those, we have about 500 plus individual investors who have invested with us. And what we do is as an equity investment, we provide a preferred return to our investors. We don't have any institution investors with us. It's us and our investors. So any cash flow that comes in from the properties, the LPs, the investors are the first preferred investors to get paid from the cash flow.
Okay, Richa, a couple questions just came in and you literally just answered one of them. It says, are you offering the LPs a preferred return? So you just spoke on that.
Yes.
Okay.
Yes, we provide a preferred return of 8% for the year. It's about 2% every quarter.
Okay, thank you. The next question is, do you only work with accredited investors?
Since we don't advertise anywhere, we have the ability to take up to 35 unaccredited investors in any specific deal. So yes, we are able to take some unaccredited investors as well.
Okay, thank you. So a question came in relating to self-direction. I'll answer that really quickly and then we can move on. It says, if you have an old 401k, could we convert it into a Roth, or should we roll it over into our current traditional IRA and then do the conversion before moving over? So if you have an old 401k, if it's all pre-tax, then it would go over into a traditional first, and then subsequently you can convert it into a Roth. So you can either, move that 401k over to your current, consolidated into your current traditional IRA, and then you can elect to, move a portion over to an IRA with Advanta and convert it into a Roth, or you can move it to a traditional at Advanta and then convert it into a Roth with Advanta. So you have a couple options, but I can certainly follow up with you just to provide more clarity at the end after this webinar. I'm sorry. Richa, you can go ahead.
Okay, thank you. So what are the advantages that we have and we pass it on to the investors? Number one is a strong deal flow. So we, like I said before, our relationship that we have in the industry matters for us to have a good deal flow. So there are a lot of opportunities that go without announced, without being offered to the public, and it's primarily being transacted through relationship. So, for me, it's all about relationship, having the right relationship with the people. That kind of sets your integrity, your credibility, and the trust. So having the relationship matters quite a bit. And all the deals that we have purchased so far has not something that has not been marketed aggressively, and it also has been through the relationship, whether it's directly with the seller or with a broker or with a lender. So that's how our deal flow comes through. Then vertical integration. As I mentioned before, we are fully vertically integrated. So right from acquisition till disposition, we do everything in-house. We do our due diligence in-house. We do underwriting, property management, construction management, asset management, and that helps us not only manage the investment and the cost, but also from a time perspective. So we are able to control every aspect of the deal from the beginning till the end, and that helps us, manage the risk and high efficiency. So with the vertical integration and efficiency, that helps us provide, like I said, the preferred return and higher income to the investors. So the question about the preferred return, we provide that based on the cash flow. In addition to that, we also give the investors the depreciation. So the depreciation, as you all know, is based on the amount that's invested. So anyone investing dollar, whatever the depreciation, it gets equally divided up with the amount that's coming in. So there is there's no preference that, okay, we as a GP get more depreciation than the LP investors. It goes pro rata based on the investment. And that leads also to an attractive higher return to the investors. So when we target about 20 to 25%, it's a combination of getting a good deal, managing it, and then exiting it with a better return to the investors. And so for us to be able to do that, we do a lot of extensive due diligence um, uh, for all the deal flows that we get. And each project is evaluated with thorough due diligence and making sure that we analyze the market, we analyze the macroeconomic, the microeconomic, and to the property level uh, details on the project to see does this investment meet our return criteria.
Okay, Richa, I have a couple questions that just came in. I know you're going to provide your contact information to reach out to Nirvana, but one of the questions is, as an individual investor, how can I get started?
Yes, so as an individual investor, we do have an investor portal. I was going to get to that towards the end of the presentation. You can log in the investor portal, register there, and we time to time we advertise or we market the deal that we have once we under contract, and there you will be able to see our latest offering. And after that, after looking at the offering, if you have questions, if you want to set up a webinar, me and my team will work with you to set up a webinar to give you more information on the offering, and then we'll go from there.
Thank you. And then another question is, how frequently are distributions made?
We make the distribution every quarter.
Okay, thank you.
Yeah, so basically, let's say the March is ending, so we will make a distribution. And again, it's based on the cash flow, and with so far, we've been lucky we have been able to make a distribution, except for the last 2 quarters, just because of the conditions in the market, but we are back on track, and we'll be making every quarter distribution to our investors. So we are lucky wherein we didn't have to go back to investors or raise any more money. We were able to manage through our cash flows last year for all our existing properties.
Okay. Another question just popped in. It says, is there a minimum to invest?
It depends on the deal. We've had opportunities where minimum was 25,000. The current offering that we have, the minimum is 50,000. Thank you for the questions. Those are all good questions. So investment review, and like I was talking earlier, so let's get more into detail how we review the investment and what is the process of going from looking at the deal to closing. So once we get a deal, we do our preliminary assessment by getting the numbers and putting it in our model, and we run an analysis in terms of not only the deal. I'm also very big on who owns the property, what is the background of the current owners or previous owners. That helps us understand how the property has been managed in the past. What are we looking at? Is this an owner that manages the properties well? Do they put enough money in, and are they in a deferred maintenance? So not only the numbers, but also the history of the asset helps us understand what are we going to be inheriting. Okay, so that's one of the things when we talk about relationship. It's just not what the property is right now, but over the past 5-10 years, what the property has gone through in terms of upgrades, in terms of management, in terms of insurance, that kind of stuff. So that's very important for us to understand. So once we have gone through and it passes the numbers test and the background test, we made an offer and we negotiate the deal with the seller. And generally, my philosophy is it's all about relationships. So who the seller is and what it is, I always like to negotiate directly if the broker is involved with the seller and have a face-to-face too, so that we all can be on the same page and the communication is not lost in transition. So having a very open, direct communication is the key to negotiate. And then once the negotiation is complete, then the next step is to have a purchase and sale agreement drawn up. And once the property is under contract, then we have some time to do the actual due diligence. What does the actual due diligence involve? It involves we send a team of people who walk every unit. So we look at every unit. We have a team look at the roof, the basement, we run cameras in the sewer line and water line to see if there's any damage. So we do extensive due diligence, not only on the surface, but also underground and in the attics and everything. And then we do a lease audit. All the 100% of the residents, we do an audit to make sure that the rent roll and everything is matching. We look at the bank statements to make sure the revenue is there. So we take a very deep dive into the due diligence and understand the property inside out. Knowing the background, knowing the current fee, and everything that helps us know what our starting point is going to be. And so after the due diligence is complete, that's when we also make a deposit. And then after that, it's when we come up with the offering memorandum. We publish it on our portal, and that's when we get the capital lined up, and then we do the closing. So these are all the steps involved, from the time we look at the deal to the time we close the deal, it's anywhere from 4 to 6 month process. And in the meantime, we also have to line up the lender and everything too. So that's why. And once we get into the contract, it's pretty much we know that that this is something that we want to move forward with, and the checks and balances have checked out, but it's more taking a deep dive into the condition of the property. So this is how we go from sourcing the deal to closing the deal.
Okay, a couple questions came in. One person referenced that they missed, part of the presentation. Again, this is recorded. It will be on our YouTube channel, uploaded later today or first thing tomorrow, so you can always go back to rewatch. But his question is, are all of your real estate properties based in Atlanta, Georgia? I know you mentioned you guys, you do Southeast, but he's asking specifically where are your properties located now?
Yes, most of our properties are located in Atlanta, Georgia, except the one that we're currently closing on tomorrow. That's going to be in Austin, Texas.
Okay, thank you. Next question is, how much % of fee is taken out of the management, operating, and other costs?
So our management fee is standard in the industry standard from anywhere from 2.5% to 3.5%, depending on the deal size and whether the deal is in affordable housing. Or if the deal is in affordable housing, then the lender requires us to take a 3.5% because of all the compliance that has to be managed. And then, in addition to the management fees, the other fees is asset management fee, which is to manage the asset, and that's anywhere from 2 to 3%. And all of these are a percentage of the revenue that's collected on a monthly basis.
Okay. Next question that came in is, what is the whole strategy? Like, how long can I expect to be in the investment? Is it 3 years, 5 years, 7 years?
It depends on the opportunity which we're looking at and what the value add is. In the past, even though we underwrite holding a property for up to 5 years, but we have exited anywhere from 15 months to 18 months. It depends on the cycle of the macroeconomic cycle and also what the strategy is. The one that we're looking in Austin is it's a 5-year hold, but we're looking to exit in about 4 years because the strategy there is to get a rezoning and increase the density on the property. But typically, we look at up to 5-year hold, but there is no minimum hold period except 1 year, and we are able to exit with a good profit with at least minimum 25% IRR to the investors.
Okay. Another question is, how often do you communicate or provide updates to investors? Is it sent out quarterly or monthly?
Yeah, quarterly updates.
Okay. Thank you. No other questions at the time.
Mm-hmm. Okay. Thank you. So we just talked about, we are focusing on the Southeast and Texas, and as we continue to identify properties, we'll be going outside of Georgia as well. So we're going to talk, and these are some of the properties that we currently have or exited in our portfolio. So like I was saying earlier, we have about 760 units. that we have exited, and we have currently a portfolio of 1,100 units and one student housing in a portfolio and a medical office building. And these are all located in Georgia. And then the largest property that we have held in our portfolio is 436 units. With that being said, I'm going to turn it over to Neil.
So, of course, in any asset that you want to invest in, you want to look at the asset itself, and our team does a lot of due diligence and makes the offering information available to you and to be able to ask those questions. But besides that, you also want to look at the macro factor. Some asset classes are just not right from a macroeconomic perspective. We think that multifamily is a safer play from a macroeconomic perspective as well, for a number of reasons. When you get into commercial real estate, of course, there are multiple types of commercial real estate. And many of the, for example, office spaces or warehouses or other types of commercial real estate that you see, they have a very long lease cycles, and that could be 5, 10 years, sometimes even 20 years. They do have some annual adjustment, but it doesn't give an opportunity from an inflation perspective to adjust those rates. Whereas multifamily, typically the leases are once a year, and so you have a better hedge from an inflation perspective. From what we have seen in the last few years, where inflation has really been much higher than the historical averages. Housing, of course, is in strong demand, and even when you have recessionary conditions, particularly the asset types that we work in, there are often, agencies that are nonprofit agencies, the government programs that support that. So we've actually not seen issues around, rental payments, where we're able to reach out and have some of the renters connect through those agencies and government programs where they're able to still afford housing. And housing in demand continues to go up. By some estimates, there are 4.3 million units needed by 2035. So we're in a good cycle from that perspective as well. And as you have all seen, that the house prices, home ownership has been declining, mostly because of the pricing issues, and just the cost of home ownership is really high, and more families are, increasingly looking for renting as well. Lastly, I would say you want to look at how the lenders look at your asset class, again from other asset classes. Multifamily, we are able to get better interest rates. Just the one that we're closing tomorrow, as Richa mentioned, the interest rate was that we obtained is 5.7%, and so that's much better even in a high interest rate environment across the different asset classes. And we are typically able to get about 80% of the debt so of the purchase price, and the remaining, of course, 20% we source from equity, combining from both general partner GP as well as limited partner LPs.
Okay, I just had a couple questions that came in. It says, do you offer protection for investors against any potential market corrections?
Yes, I'm saying because this is an equity investment, generally there is no protection on the downside, just like we don't have any limit on the upside.
Okay, thank you. Another question that came in is, just bear with me where did it go? It says, what type of insurance do you carry?
What type of I'm sorry, insurance?
Yeah, what type of insurance?
On the property, we have the property insurance that protects the property itself, and we have to carry liability insurance for the liability. So all of these insurance is lender mandated and lender reviewed and approved.
Okay.
And if the property is in the flood zone, identified, so we have to carry some flood, some hurricane and hail, and liability and property insurance.
Okay, thank you.
Mhm.
Yeah, so again, back to the macro trends, as you can see from the chart here, that the cost to buy a home on average has gone up to $2,697 per month, which is about $1,000 higher than cost to rent. And so the gap, of course, has increased a lot. This trend might even continue to increase because as interest rates start to come down, there will be more demand and the supply is low on the housing side. So we might see a gap that continues to increase. And that, from a macro perspective, again, makes it more likely that the rental demand is going to be continuing to be higher, for us to take advantage of. The other thing that I would say is that, as households get formed, they have housing needs, and for some time, the age group that was, I guess the millennials now, they have been declining in terms of household formation, but we've now seen an uptick on that, surge of millennials forming more and more households, and you can see across the younger age groups, we expect more households to be created, which increases the need for housing as well. Finally, I would say from a macro perspective, as inflation has gone up, the cost of construction, particularly new construction, has risen very high. If you look at from 2018 to 2022, the index saying that from 110 it went up to 160 or so. So that in itself makes a huge impact on new construction. We tend to focus on properties that have, that older properties, and the replacement cost is higher than what we buy it at. So it allows us to get in at a good price, but they do have light renovation needs, and that's where we are able to add value, but keep that construction expense lower in comparison to the new property build out. So those are some of the macro trends that I would say we do. Our investment thesis is that in the next couple of years, we see particularly substantial opportunities, as Richa was mentioning, in the Class B and Class C type properties, workforce housing properties, we are able to, given our network, acquire these properties at a good price and at a discount to where the market might be. And we think that within the 25 million to 100 million asset price market, that's where we are focused on and looking for deals there. Richa, back to you.
Thanks, Neil. I appreciate it.
Thanks, Neil. Great insight.
Yeah. So a little bit more about the role of a LP versus a GP sponsor. As an LP investor, you're investing in a passive perspective, and GP, we are the main operator. We source the deals, right from sourcing to executing and selling the deal. As an LP, there is no risk. There's no liability in terms of signing on any loans, any guarantees. The risk is limited to the amount that's invested by LP, whereas as a GP, we not only invest but also sign on the loan, we guarantee, and we take on the liability of the asset itself. And then from a typical investment, we talk about they can invest through the money outside of IRA, but IRA is it has been extremely popular, and people are able to invest because that's something they cannot touch, but at the same time are able to diversify their portfolio and sort of get a taste for investing in passive real estate through the IRA money. Day-to-day management, again, we as sponsors, we are heavily into day-to-day, and this is what we do on an ongoing basis. And we provide quarterly updates to the investors. And like we talked about the preferred return before, so our LPs sit in the preferred position, because we don't have any institutional investors, any cash flow coming in from the asset. gets directly gets given back out to the investors directly. And a typical equity, we have a split where we raise 90% of the equity to the LPs, and we as a GP put in about 10% of the equity. So with that, I would like to end our presentation here and open the floor for any more questions.
Thank you, Richa. If you have any remaining questions, feel free to add those to the question box, Richa. So this is how they can access your investor portal.
Yes. This is our investor portal. They can see past deals that we've had and any new opportunities that we are currently offering.
Okay, thank you. Again, if you have any additional questions, feel free to enter those. Richa, again, I appreciate both you and Richa, you and Neil for providing great insight. Talking about projects that you guys have done. I know you've worked with. We have many mutual clients. Let me go ahead and.
Yes, yeah, thank you. And everyone, we most of our investors, about 30% of the investment that we do get now is through self-directed IRA. And Reneika and her team has been absolutely fabulous in assisting, guiding, and supporting these investment opportunities. And so we are very happy. And we, like I said, I've been working with them for 14 years, and we are very in sync with the Advanta team, and we always recommend going through them for any investment through IRA. So Reneika, thank you so much for setting this up and giving me the opportunity to present Nirvana Capital Group to the investors, and I do appreciate all your help here.
You're certainly welcome. I just received a comment from one of the attendees saying thank you so much for the presentation. Great information. So again, if you have additional questions or you want to know more, or self-direction is something that you're interested in, you're welcome to reach out to me. I'm happy to get on a call with you, or schedule some time. I would implore you to just go to our website as well, just kind of browse around and just learn some more. And again, if you wanted to invest in one of Richa's projects, definitely feel free to visit that website. She provided their investor portal, so you can certainly register and see their their previous deals, but also be on the list to potentially invest in one of their upcoming deals. And with that, I'm going to go ahead and end today's presentation. But again, I thank you all for taking the time to join us. Thank you, Richa. Thank you, everyone. Happy investing.